If you want to subscribe, like, or learn how we do the trading, the AI that we use, the how we set up the trend lines, what pivot dates we're using, you can comment course below, and we'll show you how we do this. If not, we do have a private group that trades this information. But in the meantime, we had said that if this right here held, we were going to come back, test this trend line. I said, if we touch this trend line under 58.30 and somewhere in the 57.71 area, defend, and we break out the 58.30, your risk on to 59.17, 59.83, and ultimately to 60.50. You don't want to um, you don't want to be shorting the initial back test. So for example, this trend line broke. If you shorted and it went under 59.17, you trailed it to 58.30, but you wanted to be careful. Why? Because just like every other trend line on Liberation Day or this bear flag, the market traps everybody, goes back to find liquidity, and then rolls over. So what's going to happen? The market or the algos are going to come back to 59.83, 60.50. Because remember, there's folks out here from even the elections that are still stuck in the nosebleeds that want out before any of these catalysts. We don't have any supply chain issues yet. None of it has shown up in the numbers, right? Because companies were pre-ordering and front-running the tariff. So what happened? No one's felt any pain. So you follow the chart. 58.30 broke out. 59.17, 59.83 are the big daily numbers. There's a lot of macro numbers you could do on the 15-minute, but once you start getting past April, you want to go longer term. You want to look at your daily. If you're babysitting the 15 minutes or 30 minutes or anything lower than the 4 hour, you're going to get chopped up. Now, if we break out over 59.83, again, your risk on to 60.50. We want to see where did this trend line back test, here or here at 60.20, and then rejects, and that's where you want to take your short. Now, seasonality says that summers tend to be bullish, right? The bearish pivot were in June of 2008 during the financial crisis. The market came down 9% and fully recovered it. And last year, my group caught the carryover trade, right? July FOMC, which is usually a bullish month. We caught the 9% drawdown back here. We showed you on a previous chart if you want to check it below. And then that was the low until the election. So don't front run. Don't assume we're going to roll over in the summer because, frankly, it hasn't been bearish in 21 years. You want to see, does 59.83 reject? Okay, then take your short back to 59.17. Now, if we break under 58.30, that means the market is not finding liquidity, and she may want to come down here to the 60, the 66, 62, 60, 64, all this cluster right here. Come get a little liquidity, or come further down on this trend line to 55.64, or hopefully come all the way down here to, fear factor under 5,300 and get some liquidity. But draw your trend line, set the alert, let the trend line break up to let you know that you caught the long when I said, do not go short. There is no more tariffs. POTUS can scream all he wants about tariffs, but there is no more. The bond market is not worried about tariffs. They're working about supply shock that may hit after July into August, similar to COVID. We got the highest CPI COVID print after August when everybody's demand comes in. Everybody goes back to work. Kids go back to school. You start buying supplies in the summer. Everybody's out on vacation and spending money and out to dinner. That doesn't hit retail just yet. It actually allows retail time to backfill and mitigate the damage. So we may not see any right away. So if you missed the long, let 58.30 backtest or let it go under 59.17 here on the daily candle, then recover and continue to risk on as a backtest to either 60.50, 6,200, or my ultimate target of 6,500. If your trend line breaks down, take your short, or again, if 59.17 breaks down, take your short back to a retest of 58.30, but be very, very cautious going too short, because this trend line defended, which was sort of resistance here. On what date was this? On about April 22nd, there was a little bit of resistance here that turned into support. And frankly, we haven't even backtested either side of this bull flag. So eventually, this trend line here, down here, let's just say 5,300-ish, will eventually get retested on a daily. Now, does it happen here in August? Does it happen for, who knows, CPI, non-farm payroll data that's coming up in June, which is coming up with one of our pivots? Don't assume. Let the level hit. If the levels are holding, don't short. What are you shorting? There's no data here to short. There's no chart here to short. At the very least, let it get to 6,200. Let this become, like I had mentioned before, let it become a possible right here. Let's just say hypothetically, this is a top, right? And then we get up here to the nosebleeds, and then this becomes a top, and then you short this, right? That's what you want to be shorting, but don't assume that that's going to happen, because again, it's breaking out as a bull flag. What we see is a total bull flag right now. There's nothing bearish about this chart on the daily. That was a bull flag that broke out, that we said, or an awkward inverse head and shoulder that can still kind of be, kind of um, come down to 55.70, grab some liquidity and fire off. Again, I'm still in the camp that we're doing one of these. We're coming down. My Tesla alert just went off live for you guys. So Tesla is hitting all the team's alerts. Congrats if my team caught that. But this is essentially where we are so far with this count. We want to see the if this plays out. We come here, right? We come around here. Let's just say this rejects around here. Then we come back down. 5,500, 50, anywhere in this area. I'm putting the blue line just to give you an idea that the trend line may test. But let's just say it hits 56.64, 56.61. Let's just say 55.70. Any of these three levels hold, we're back to the nosebleeds. That's an inverse head and shoulder. And this is my ultimate target by July 31st. That is my chart for the summer. You want to do less? Trade this. Now, again, this could be a double top, but everybody's negating for whatever reason. People want to negate that. Hey, this is I'm too bearish and the tariffs. Ignore the news. The market does not care about the news. The market is reactive, not forward thinking. It's looking at the levels they're holding. You have risk on. A level fails, you short and you be careful. Okay. Where I want to be have more short is, once let's say we come down here, we do our inverse head and shoulder for the summer, then I want to be shorting up here in the middle where no one is bearish. That's when I want to be shorting the market right up here at the bottom of this bull flag rejection, complete collapse after August, right? But in the meantime, let something backtest, let the trend line backtest, then initiate your short, because that's how liquidity traps work. We had said last week the market was going to trap. It broke out. Everybody was bearish into a weekend because of some tariff EU thing. Turned out to be a bunch of BS, and we're squeezing, right? The next thing will be Nvidia earnings. Let's see how she reacts. If Nvidia is already, a little bit overpriced here at 136, 140, or it can blow out earnings. I suspect they're going to guide down. Everybody's, kind of going more conservative for this earnings season, right? They don't know if the tariffs, who's fighting what's going to be restrictive. So I suspect Nvidia is going to pull the market down, give all of you folks another opportunity to retest this trend line, and then just keep skating longs into July and August. And or maybe, if VIX gets high, do some sort of debit spread or call spread to protect yourself, because directional can get IV crushed even if you're right. But again, if you want to learn how we do this, comment below, subscribe and like, and we'd love to teach you how to be Trump's market.